Hi guys, welcome back. So today we'll be analyzing Devyani International and Sapphire. Unlike my other videos, where I go in depth and in detail of one business model, today we'll be seeing like which business is better than the other, since both of them are catering to the same, to the same masses and they have the same product portfolio. So we will see which is better than the other, right? It's more like a peer-to-peer analysis. That's what we can call it. And yeah, let's go ahead and see, how Devyani and Sapphire have performed in the last quarter and what is the future outlook like. So I'll just share my PPT. Right. So today we'll be doing Devyani and Sapphire. Unlike my previous videos, where I go in depth in the whole balance sheet and cash flow statement, I won't be doing it. I won't be doing it today because see, the Q4 FY23 is like 3 months, 3 months past, right? Like 3 months have been passed after that result. And the company that I'm doing today, all the result seasons have started. The Q1 results are not out for these companies. So, and I don't want to talk about the data that's like really 3 months back. So what we'll do is we'll just concentrate on the business model and what the management has told in Q4 FY23, the outlook they have given, and how the situation of the business is as of now, right now as we speak. So we will do more on that rather than going into the whole balance sheet and cash flows, right? So I think let's first understand the business model, right? What does Devyani do and what does Sapphire do, right? I think all of us all of us have like at least tasted their product once. I mean, having said that, maybe if you're a vegetarian you probably haven't had KFC, but yes, I think most of us have tried one of their products or these products in our entire life, right? So what does Devyani and Sapphire do? Devyani and Sapphire sell KFC and Pizza Hut. I mean, they set up the stores of KFC and Pizza Hut and they sell their products. Now, as you know, right, KFC and Pizza Hut both are not Indian brands, they are international brands, they're American brands. So the parent company of KFC and Pizza Hut is called as Yum Brands, right? So Yum Brands is an American company. Now, of course, Yum Brands also can come and set up the business in India. But what happens is, since they're an American company, since the parent company is American company, they won't be able to understand the geography, right? Because see, the American lifestyle is different from the Indian lifestyle. Our diets are different. Our food culture is different, and we have so many differences, right? When we talk about the whole American and Indian lifestyle. So what they do is, and also, right, it becomes a hassle for them, to come here, tap into the geography, understand the people, and understand the behavior of all of these. It becomes tough. So what they do is they franchise out to people to open their stores and everything here in India. Now, what is this franchising? In the sense, franchise means, let's say I'm the owner of Yum Brand, so I will let you use my name, I will let you use my product, I'll let you use everything. In return, every time you do a sale, you have to give me a certain percentage or a part of your sale to me, right? So similarly, Devyani and Sapphire, both of them, what they do is they have rights from Yum Brands to sell the products, KFC and Pizza Hut ka products in India, and in return they pay a certain percentage of money to Yum Brands. So this is the whole business model of Devyani and Sapphire, right? So as you can see, the core brands that are there for both Devyani International Limited and Sapphire Foods is KFC and Pizza Hut. Other than that, Devyani has two extra like Costa Coffee. I think Costa Coffee you all might have seen. It's similar to like a barista or like a bit premium compared to Cafe Coffee Day. And Vango is a South Indian chain. Like basically, you get all this dosa, idlis, and pongal and all of that. You might have seen this in some airports. It's very famous there in airports. But having said that, the core brand, the majority of the income comes from KFC and Pizza Hut. Similarly, here also, Sapphire has all the three brands of Yum Brands: KFC, Pizza Hut, and Taco Bell. But having said that, KFC and Pizza Hut are the main two brands, like core, like the majority of the revenue is coming from here. Right. Now, yeah. Now, what is the relationship that they have with Yum Brands? That Yum Brands, like I told you, is an American company, right? So here are the three conditions that Yum Brands has with that Devyani and Sapphire. Although both are Indian companies, here is the three how do I tell you, the three conditions that Yum Brands has put on them. That is, the first thing is, whatever sales that they do, right, in a year or in a month, whatever it is, a 6.3% of that revenue has to be gone to KFC or Pizza. Oh, sorry, has to be gone to Yum Brands, right? That is one thing. The second thing is, of course, whenever they open a store, let's say if Devyani International opens a store or if Sapphire opens a store, what happens is they have to pay a one-time fee. Like whenever they open a new store, they have to pay an initial setup cost of certain amount of money to Yum Brands. Now, let's say due to whatever reasons this store gets closed, maybe the people are not coming to whatever the reason can be, Yum Brands is not eligible. You can't ask Yum Brands for a refund. It is a non-refundable amount they have to give to Yum Brands whenever they're starting a store. Not only this, let's say now I started a KFC ka store in 2010, right, or in 2000, let's say in 2021. Now I have the right to continue operating the store. I have the right for this for the next 10 years. That is from 2020 to 2030. After 2030, what happens? The license for the store gets cancelled, and you have to pay again. You have to renew the store thing again. The store fee again, right? You have to do that after 10 years. 10 years ka contract is there. And then why this contract is there? Because as you know, if you've seen the entire, like whether you buy KFC here in Bangalore or whether you buy KFC in Bombay or in Delhi, you would have seen the product taste is same, right? Because why? The entire logistics is managed by one company, and the entire and even if you see, although we are having Devyani and Sapphire, two people catering to KFC and Pizza Hut, but you see only one kind of advertisement. In different advertisement, it is the same advertisement throughout India. So what happens is this fees, whatever they pay, it goes into the TLA, that is nothing but the logistics charges to get their whole supply, and the TMA, that is the marketing charges. The other thing also what they have to do is, apart from the 6.3% that they pay as a franchise fee every out of their revenue, and then this renewal fee and that one-time store setup cost, other than that also 6% of their revenue they have to pay for marketing charges to Yum Brands. So Yum Brands does all the marketing. That is why you see you don't have two different ads, you don't have two different types of products. If you go to Bombay or Bangalore, the products remain the same and the marketing is same, because the parent company Yum Brands take ownership of all of these. Here also what they have percent of their revenue to Yum Brands to do all the marketing charges. Out of 6%, 1% the store will have to spend on local marketing. Now, what is local marketing? Let's say near your gully or near your area, a new KFC has opened, right? And then you will see all those workers going out and giving pamphlets, or they will put up a big board telling like, "Hi, welcome to KFC," and all of that thing. So that is called local marketing. So this is the relationship or the contract that they have with the parent company or Yum Brands. And of course, they have to abide by this in order to open the stores in India and start selling the products. So that is about that is a relationship. And as you can see, this is a similarity that they have. Remember, I started this whole video by telling, let us try to understand what is the similarity and what is the difference. The similarity is the relationship that they have with their parent company, Yum Brands, for Devyani as well as for Sapphire is the same. There is no difference. The royalty that they pay, the marketing fees that they pay, the logistic fees that they pay, everything is same. Now, what is the difference, right? Before I go, I would just like to show you the peer-to-peer analysis, right? If you see, I've taken revenue, like if you Q4 FY23 compared to Q4 FY22, if you see the change in revenue for Devyani International Limited versus Sapphire Foods International Limited, if you see the year-on-year change, Devyani has grown by 29%, whereas Sapphire has grown by 12%, right? Similarly, even in terms of profit before tax, I've taken profit before tax here is because in Sapphire there has been an additional tax. They have had, I think, tax deferred amount that has come to their account. Because of that, the PAT is being really inflated. Okay, that is why I didn't want to take the profit after tax. I took the profit before tax as well as profit before margin. If you see here also, here the degrowth has been hardly 2.8% on a year-on-year basis. But can you see here the profit before tax has fallen down by 50%, like more than 50%, in fact 57%, right? Similarly with the profit before margin also, the profit before margin is like 5.3 here, whereas here it is hardly any, it is just 2.1. Now you can ask yourself, right, although both of them sell the same kind of product, right? They sell both are in KFC and Pizza Hut. They both have the same price. Like whether you go to KFC in Bangalore or Bombay or Delhi, it is the same price. Both are paying the same royalty. Both are having the same marketing, logistics expenses. So everything is same. So why is there still, can you see the huge difference when you see in terms of revenue and profit? The answer comes down to one thing, that is geography, where these stores are set up, right? Now, here's the thing. I think when you compare KFC and Pizza Hut, which is done by Devyani and Sapphire, versus, let's say, McDonald's. So the McDonald's ka franchise that you see everywhere, it is done by this company called Westlife Food Development. So agar aap koi bhi McDonald's ka store dekhte ho, the franchisee for this is Westlife Food Development. Now, Westlife Food Development, what has happened is, in Westlife Food Development, the region is between north and south. In India, if you go to the northern part of India and the southern part of India, Westlife Food Development is the owner of McDonald's, right? And they have the right. And East Investors, some other people are East Invest of India, some other people. So when you talk about McDonald's India, they have clearly segregated India into four parts, and based on that region wise, they have told, okay, this company can do in North India, this company in South India. Whereas when you talk about Yum Brands and the way they have done this whole thing is, can you see here? Yeah, they have distributed in some parts, like they have not clearly gone into like region, but they've given some regions to Sapphire India, and they've given some regions to Devyani International Limited, right? And one thing you can see here in Sapphire, what you can see is, can you see most of the regions that you see here in Sapphire are heavily like a vegetarian eating population, whereas in Devyani International Limited, you can see Calcutta, you can see Bangalore and Hyderabad, which are a lot of meat eating population. As a result, because of this is one of the reasons that you see that the Devyanika how do I tell, Devyanika result is much better than that of Sapphire. One is because due to the geography that they are there, right? Since Devyani is concentrated heavily in Bangalore, Calcutta, and Hyderabad, where the meat eating people are more. As a result, their revenues and all the other metrics are better. I also read somewhere, I think I don't remember where, that if you calculate the GDP like to the non-veg population, Devyanika comes up to like around 53% versus Sapphire comes up to 48%. I don't know which brokerage or some report that I read had done a research or analysis on that, right? See here also, as you can see, right, Calcutta is of course a meat eating population, so is Bangalore. But can you see here, Sapphire one of the regions is of KFC is Gujarat. Like, you tell me who in Gujarat will eat KFC, right? That's one thing. The second thing is, the second reasons for margin of Devyani being higher than that of Sapphire is, if you can see here, Devyani is concentrated here, right? Like all in Calcutta region, like predominantly in the east region compare here. Sapphire is in the western region. So here also the eastern region, if you see the wages, the wage that is there, you pay the minimum wage that you pay, and everything is of course is relatively lesser compared to that of the west. As a result, there also the margin a little bit improvement or a play keeps happening, right? That's another thing. The third thing is the product category that we talk about, right? Like what do I mean by product category? In the sense, like, see, Pizza Hut is something that's normal, like you have Domino's. I similarly with burgers also. But KFC is the only thing. Like when I tell fried chicken, the first thing that goes into your head is KFC. Like fried chicken is synonymous with KFC, right? And KFC is like if you read the con call, like KFC is the most standing brand when it comes to a QSR, the most popular and the most standing brand. As a result, that is why this whole non-veg and vegetarian population comes into play here. That is one of the thing. Not only that, the another reason for Sapphire's revenue to be dragging also. Devyani has a right to open and sell KFC ka Pizza Hut ka product, like I told you, in these cities that they have shown, as well as in Nigeria and Nepal. These are the two places they can open a KFC ka store. Whereas Sapphire can open in these parts of India, like they've highlighted. Can you see these parts of India plus plus in Sri Lanka and Maldives? As you know, in Sri Lanka, right, the whole political and socio-economic crisis that is happening, right? Because of that, the entire revenue is getting dragged there. You know, you would have seen in the news, you know, like the ruckus that is happening in Sri Lanka, and the inflation is at all-time high. Because of this is also one of the reasons that the revenue is also getting dragged for Sapphire. So these are the two reasons. So now let me just go into like a P2P analysis and like peer-to-peer analysis and see. If you see, like, of course, right, on all parameters, if you check revenue, profit before tax, profit before margin, you see Devyani being far more a better contender than Sapphire International, Sapphire Foods, right? That's one thing. The next thing is same store sales growth. Now, what is same store sales growth? Let's say today, let's say I opened a store 5 years ago, right? And of course, let's say it was making some 3 crores of sale. And what is it making right now? Let's say 2019 it was making 5 crores of sale. Versus in 2023, how much is it making? What is the increase from 2019 to the current year? That is called a same store sales growth. If you can see the same store sales growth also, like here it is higher, right? This is for KFC, it is 1.9%, and here for Pizza Hut it is a negative sales growth. Whereas here it is KFC is 2%, and here they haven't mentioned the number. The next thing is the addition of stores, because see, when you're talking about growth, the incremental growth will come, the more stores you add, from that only it will come. Here also, can you see the number of stores that Devyani is adding in KFC is more, 135, versus here Sapphire is hardly 78, right? Similarly in Pizza Hut also, can you see again the store count is more. But if you take on an overall basis, when you see like the store count, like how can they double the store count in the next, like how fast they can double the store count. If you see, the calculation comes up to same, like Devyani can double the store count in 4 years and Sapphire in 4.5 years. So even in all of these metrics, you can see that Devyani is clearly way ahead of Sapphire, right? That's one thing. The next thing is, of course, I will just go to the management commentary, like what the management has been telling. And since I've tracked these both of these companies in the entire QSR, since Q1 FY23, I've been tracking this. So let me just give you the entire picture. So what is happening in QSR right now is there is a massive shift that is happening from the like how do I tell you, from the unorganized space to the organized space, right? Why is this happening? See, when you talk about the unorganized space, also there are many players. If you go to a local, if you go to a gully, in your own gully, you would have seen, you will find a KFC and a Pizza Hut store, but there are many local eateries also that you can see. Now, because of this, all this food and inflation and everything that is happening, these people can't keep up with the cost. So all this, and of course, COVID also was one of the reasons, and all of these shops got shut down. And the shift from unorganized to organized space is increasing on a year-on-year basis. You can say that it is slowly increasing, right? But when you talk about QSR, right, the main thing, like what separates a QSR, let's say from a restaurant where you go and eat, right, that is two things: value and time, right? अगर आप जाते हो, let's say for a fine dining space, अगर आप अच्छे होटल में जाते हो, like Absolute Barbecue or Barbecue Nation, you will have a good seating and everything, right? And there you won't care, you're not looking for your food to come in like, oh, 5 minutes. You are okay if the wait time for your food, once you place the order, your wait time for your food is like 20 minutes also. If the chef tells you know what, you have to wait 20 minutes for the food, and you're okay even paying like extra also for the food. You'll go and you'll make a bill of 5,000, 6,000, or 3,000 on an average income, right? So that is something that you do. But in QSR, you don't see that. Why? Because the two important critical parts for any QSR is value and time. One is time. My food has to be delivered at the fastest, and you can see over the years, we have seen that the time to reach a customer as quickly as possible has increased. Earlier, Domino's was doing 30 minutes ka delivery. Now Zomato started doing like 30 minutes ka delivery, or you'll get free. As a result, Domino's cut down their time from 30 minutes to 20 minutes. I don't know if you are ordering Domino's, probably you would, you would be able to relate to that, right? Similarly, here also, KFC ka also have started this new policy, because time is a crucial component, that once you go to the counter and place the order, you will get your order in 7 minutes, right? Similarly, here also, Pizza Hut also has done the same thing. They are mainly focused into the whole getting your delivery also in 30 minutes. So time is crucial. The second thing is value. Value ka matlab kya hota hai? Like the reason you go to QSR is because you're going to get good taste and good quality of food, but for a cheap rate, right? That is the reason. Now, value also here is one thing, that I need to have different categories. I need to go different SKUs. I need to go from like chota product, like hardly 50-60 rupees ka product, to the expensive product, like probably ranging to 700-800 rupees. Now, why is this important? Why is this whole different SKUs are important? I don't know which con call was this, but when Pratik Potla was the CEO of Jubilant Foods, ex-CEO of Jubilant Foods, right? That is Domino's. He told why this product portfolio having different categories important is because, let's say when you are a teenager, right? You don't have a lot of money, your parents hardly give you any pocket money, so you won't have, so you would also see, so you would also want to go and go and eat from Domino's, or Burger King, or Pizza Hut or KFC, right? So they want to cater for you also. Let's say, I remember this when I was a kid, and if I used to have $100, this was back I think in 2014 or 2015, I was in high school, and you would go to McDonald's and you would get the whole McAloo Tikki, Coke float and French fries for $100, right? And you would feel rich. I did. So that's one thing, right? So you can attract that one category, right? And as you grow older, you become, you get your first job. Of course, you'll go from probably ordering a small value pizza, like let's say if you were a kid having 100 rupees of pocket money, you'll go to Domino's and you'll order one that 60 rupees or 70 rupees ka Pizza Mania, right? Pizza Mania. And then what will you do when you have earning powers, when you start earning, let's say you will go and order some 300 rupees ka good veggie extravaganza. And let's say when again you get a promotion, and again you might be preferring something like a chicken dominator or something, right? So that is the reason they need to have different kind of product category, or different kinds of SKUs, so they can cater to all kind of people, right? Whether it is a teenager, whether it is a person who is earning well, or whether it is a person who is having a decent income. That is the reason they need to have SKUs ranging from 49 rupees to, let's say, 300 to 600 rupees also. That is the reason. So two things, value and time, becomes critical. Now here, what used to happen was, of course, Pizza Hut was lacking in both. Earlier Pizza Hut, if you would have seen, right, they had these huge stores, right? Like compared to Domino's. Domino's ka ta chota chota stores hota tha, but Pizza Hut used to have this huge stores, and all this really fine dining with sofas and all. They Pizza Hut understood the problem that they're a QSR chain, they're not a fine dining space. So what they started was they started reducing the store ka size from, I think, from going to 2,000 square feet. I think they started cutting down the store size to 1,000 and started concentrating on the delivery, and they started concentrating on the time aspect of the QSR. That is one thing. The second thing is and of course, even in KFC, they did that 7 minutes ka thing. The second thing where they changed was in terms of value. I think earlier when you went to Pizza Hut, right, you didn't find this fun flavor pizza. You used to find it in Domino's, right? Pizza Mania milta tha. But Pizza Hut, me used to not get that value wala pizza. It used to start from 200 to 300 rupees. So what used to happen? They used to like miss out on the whole bunch of category of people of who could only afford that. As a result, what happened to cater to the value of the product, that lower end of the SKU, they started this fun flavor pizza for like 80 rupees, 60 rupees. So they started this both value and time that they started, and of course they reduced the size. The next thing what happened was they when they were on track of doing this, what happened, of course, COVID, we were coming out of COVID, inflation started and everything. As a result, the entire sentiment, the entire QSR demand that was there had gone down, like completely gone down, the entire consumer demand, right? And even right now, if you see, the situation has not changed. The situation that was there in Q2 and Q1, the inflation thing that started there, it has still remained. And even right now, the management is telling it will take them 6 to 12 months. So what had happened was, of course, one is the people who started coming to the restaurants as a result of inflation. See, of course, right, when there is inflation, you won't go out and eat as often as you used to do, right? You will try to save money. As a result, the number of people going to the store, that is why you see the same store sales growth has come down to 1.9%. It used to be around 10%, 10% and somewhere between 10 to 15%, and it has come down to 1.9%, right? That is one thing. The second thing is, of course, the situation got so bad, like the Pizza Hut ka, the cheese that goes on top, all of those prices increased. KFC ka chicken ka prices increased. And on top of that, what happened was in Sri Lanka, the situation was so bad because of all this socioeconomic, that the petrol ka prices were so high. Like, they couldn't afford the delivery, to do the delivery of Pizza Hut on bikes. So as a result, I still this is from Concall ka I have taken the Sapphire Food management, they told that they came up with an innovative idea to beat this whole inflation cutting and petrol price. They started delivering pizzas on cycles. Can you imagine? Like, that's how worse the situation was for them. Like, it was like to protect their margins to an extent. They went to an extent of delivering pizza on cycles. That's one thing, right? So this happened in Q1 FY23. Like I told you, that inflation that started, this was in Q1 FY23. In Q2 mein kya hua? Like, they had a lot of vegetarian festivals, that is Dasara and other Hindu festivals that come. Because of that, this was literally written on their PPT also. You can just take any Q2 ka PPT of Sapphire. It was written there that sales were impacted due to higher vegetarian festival days. In Q3, what happened was, as you know, Q3. How do I tell? Yeah, in Q3, right, Christmas comes, right? In Christmas, what happens? People tend to use, you see a lot of production of cakes and biscuits, right? And all of these cakes and biscuit, what goes? Eggs goes in that. As a result, the price of eggs and chicken went up. As a result, the inflation of KFC rice rose. As a result, because of this, again, the inflation continued in Q3, and in Q4, there was no demand at all. Like, overall, there was a very, very weak demand. So you saw, right, the Q1 to Q4, the story has remained the same. Only certain incidents has changed. So this is the story of the entire QSR ka chain, as you can see. From Q1 to Q4, the demand has been subdued. The inflation story continues, and you saw like how the inflation story is. Like, every day there's something new that is happening. One day the fuel car prices is there, so they're selling pizzas or delivering pizzas on cycle. The other time it is because of vegetarian festival. The next quarter it was because of the Christmas and everything. So as a result, these companies, because of that, they are not able to perform well because the demand is not great. This is what I keep telling you always. You can have a great set of numbers in one quarter, like current quarter. If you see Q1 ka result, if it is great, it is fine, right? Highest profit, highest revenue, ROE is doing well and everything. But at the same time, if you see the future demand is shrunk, if the future demand is not there, if the outlook is not good, then of course the business will go nowhere ahead. So that's that about Devyani and Sapphire. I hope you know uh, I I hope I could explain it properly. So yeah, that's that. So I hope to see you again next time, and until then, goodbye. Bye bye.